Well, let's talk about the markets and more with Chockalingam Narayanan. He's the head of equities with BNP Paribas Asset Management. Good afternoon, and thank you so much for joining us today on ET Now. Am I right in the statement I made with respect to the impact of U.S. elections on the Indian equity markets? Maybe a tad bit of a move in terms of operations for, our big tech or our small tech firms back home, but otherwise, do you think that this is yet another binary event that perhaps Indian investors should not, should sort of read in the papers, watch on ET Now, and then move on with their lives as usual?
Sure. Thanks, Mobina. Thanks for having me. A very good afternoon to all the viewers. I think you kind of summarized it quite well. It's definitely a landmark event, but, there are ground realities which are there, which with regards to India as well. At the outset, if you kind of, take a step back and look what's happening with regards to the economy, you will notice that, the developed world is going through a second wave. As we speak on that, in India, we are seeing the active cases kind of recede. But that's not to say that we may not see the second wave. But at least when we look at the high frequency indicators and activity levels, things are slowly, seeming to come back to normalcy. So the high frequency indicators, if you look at the composite indicators, things are definitely, looking on the mend. So in that sense, yes, you kind of summed it up quite well.
Yeah, so let's talk then about this on-ground recovery that we are witnessing. As you said, things are on the mend, but let's not forget that the markets as well ran up quite significantly, perhaps in anticipation itself of the same. So do you think that whatever recovery we were anticipating is already priced in with the Nifty at 11,800, 900?
Sure. I think the markets have had fairly stellar recovery with regards to from the bottom, and in that sense, yes, when we look at the trailing 12-month numbers and the earnings, we are indeed at a fair bit of premium. But the trailing 12-month earnings are including a 68-day lockdown period. So if one were to kind of normalize it, I would say, at least our data kind of suggests that we are possibly at about a 10 to 15%, premium as far as the markets are concerned in terms of the PE multiples are concerned. But cost of capital has also moved a tad bit down. So to that extent, one has to look at it in that context as well. But having taken all those things into consideration at a market level, definitely there is, you can say that the risk reward is slightly more skewed in favor of risk versus reward. But that said, there are definitely pockets where if you look bottom up, you are seeing some of the larger companies who are doing quite well. That's starting to happen. Not only large companies, good companies that are well run, large, mid, small. As long as bottom up they're executing well, they're starting to do well. So it's looking a lot more bottom up stock picking, sort of back to that sort of a style. Given the markets at the headline level have seen a reasonable amount of recovery.
And that was actually going to be my next question. Many people are calling this liquidity-driven sort of rally, unlimited stimulus and what have you, sort of perhaps causing almost every stock out there really to rally. But do you believe that many of these stocks that we have witnessed rally significantly, especially since March now, may hit a valuation hurdle, including for our own benchmark?
True. So we're starting to see that with regards to some of the companies and post the results. If you look at how the stocks have kind of reacted, the result season thus far in the Q2, you would have kind of witnessed a pattern where post good results, the stocks in more cases than not have kind of given up those, have kind of cooled off. So there is that adjustment kind of slowly starting to happen. It's only in fewer results that we've seen post results kind of a big move being seen. It's only in sectors or companies where that did not participate that well in the rally are we seeing that kind of move. So to that extent, yes, there is definitely that differentiation which is starting to play out. And if companies which have seen a stellar run as far as the stock prices are concerned, if they don't live up to the expectations, we are definitely seeing that bit of profit booking starting to happen from the investors.
All right. Well, it was a pleasure talking to you today, Mr. Narayanan. Thank you so much for joining us on today's episode of the Newsroom on ET Now.
Thanks, Mobina. Thank you. Thanks, everyone.